Preparing for a finance analyst at Northwestern Mutual interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work as a finance analyst at Northwestern Mutual? I'm attracted to Northwestern Mutual because finance directly supports a long-term, trust-based business. The company's insurance, investment, and planning activities require careful forecasting, capital discipline, and clear communication. I would enjoy turning financial data into insights that help leaders manage expenses, profitability, and risk. The role also fits my strengths in Excel, structured problem-solving, and collaboration. I'm looking for a place where accurate analysis matters beyond a quarterly result and contributes to lasting client relationships. While answering, connect your analytical interests to Northwestern Mutual's insurance and wealth management businesses, emphasize long-term financial strength, and explain how the role supports disciplined decisions, forecasting, reporting, and client outcomes. Question 2. What do you know about Northwestern Mutual's business model? Northwestern Mutual is a diversified financial services company best known for life insurance and broader financial planning. Its products can generate recurring premiums and investment-related revenue, while the company must also manage long-term policyholder obligations and claims. Advisors connect insurance and wealth solutions to clients' needs. From a finance perspective, that means analyzing earnings, expenses, capital, liquidity, investment performance, and assumptions over long horizons. The model rewards financial discipline because trust and strength are central to the brand. Make sure to cover Northwestern Mutual's life insurance, disability income insurance, annuity, investment, and financial planning activities, plus the importance of recurring premiums, policyholder obligations, distribution, and long-term capital strength. Question 3. Walk me through the 3 financial statements and how they connect. The income statement measures revenue, expenses, and net income over a period. Net income flows into retained earnings on the balance sheet and begins the operating section of the cash flow statement. The balance sheet shows assets, liabilities, and equity at a point in time, while cash flow explains the change in cash through operating, investing, and financing activities. For example, depreciation lowers earnings but is added back in operating cash flow because it is non-cash, while an asset purchase reduces investing cash. In your answer, explain the income statement, balance sheet, and cash flow statement, then show how net income, working capital changes, depreciation, retained earnings, and ending cash connect across them. Question 4. How would you analyze a variance between actual and budgeted expenses? I would first calculate the dollar and percentage variance, then determine whether it is favorable or unfavorable. Next, I would separate volume, rate, timing, mix, and one-time effects. For an unfavorable technology variance, I might compare invoices, headcount, contract terms, and project timing with the budget owner. I would assess materiality, validate the explanation against source data, and document the conclusion. Finally, I would update the forecast if the variance reflects a recurring trend rather than an isolated event. Be sure to mention defining the variance, separating price and volume effects, investigating timing and one-time items, consulting budget owners, assessing materiality, and documenting a clear explanation with corrective actions. Question 5. How would you forecast revenue for an insurance business? I would build the forecast from operational drivers rather than simply applying a growth rate. For insurance revenue, I would examine in-force policies, new sales, premium levels, persistency, product mix, and expected investment-related contributions. I would compare historical conversion and retention patterns with management's assumptions, then create base, upside, and downside cases. I would reconcile the forecast to prior periods, investigate unusual movements, and clearly distinguish assumptions from actual results so leaders understand both the estimate and its sensitivity. Focus on policy counts, new business, persistency, premium rates, product mix, claims or lapse assumptions where relevant, historical trends, management inputs, scenario analysis, and reconciliation to operational drivers. Question 6. What is the difference between generally accepted accounting principles reporting and statutory accounting for an insurer? Generally accepted accounting principles is designed to provide a consistent view of financial performance and position for investors and other users. Statutory accounting is designed primarily to protect policyholders and assess an insurer's ability to meet obligations. It is generally more conservative, with different asset, liability, and revenue treatments, including rules around admissible assets and capital. Therefore, an insurer may report different earnings or equity under each basis. A finance analyst must understand the basis used before comparing ratios, trends, or management results. In your answer, distinguish investor-oriented generally accepted accounting principles from regulator-focused statutory accounting, discuss conservative valuation and admissible assets, and explain why capital adequacy and policyholder protection drive statutory reporting. Question 7. Which financial metrics would you monitor for Northwestern Mutual? I would monitor metrics across growth, profitability, risk, and financial strength. Examples include premium or sales growth, persistency, expense ratios, operating income, investment returns, liquidity, capital measures, and claims or mortality experience where applicable. I would also track actual results against plan and prior periods, because an isolated ratio can mislead. The right dashboard should connect operational drivers to outcomes, for example, whether new business growth is profitable and supported by sustainable retention, rather than merely increasing volume. Mention profitability, expense efficiency, premium or sales growth, persistency, investment returns, liquidity, capital strength, claims experience, and operating trends, while explaining that metrics should align with product economics and business objectives. Question 8. Explain how changes in interest rates could affect Northwestern Mutual. Interest rate changes affect both sides of an insurer's balance sheet. Rising rates can improve reinvestment yields over time, but they may reduce the market value of existing bonds and influence policyholder behavior or product demand. Falling rates can support bond prices but create reinvestment pressure, especially when liabilities or guarantees remain attractive to policyholders. I would analyze duration matching, unrealized changes, liquidity, and scenario impacts rather than assuming one-directional result. The conclusion depends on product design, portfolio composition, and accounting basis. Make sure to cover investment income, bond prices, asset liability matching, policyholder behavior, product guarantees, discount rates, reinvestment risk, liquidity, and the difference between short-term earnings effects and long-term economics. Question 9. Tell me about a time you used Excel to improve a financial analysis. In a class project, I replaced a manually updated expense tracker with an Excel model using structured tables, SUMIFs, XLOOKUP, and pivot tables. I separated raw data, calculations, assumptions, and outputs, then added checks for missing departments and duplicate transactions. The process reduced monthly preparation from several hours to roughly 30 minutes and made variances easier to investigate. I also documented the logic so another user could update it confidently. That experience taught me that usability and controls matter as much as formulas. Be sure to mention the original problem, data sources, formulas or tools used, validation checks, time saved, business impact, and how you made the workbook understandable and maintainable for other users. Question 10. How do you ensure accuracy when preparing a financial report? I use a repeatable control process. First, I confirm that source files are complete, current, and authorized. I reconcile totals to the general ledger or an independent report, review formulas and links, and perform trend and reasonableness checks against prior periods. I investigate unusual movements instead of forcing the numbers to match expectations. Before submission, I review assumptions, version control, and formatting, then ask for a second review when appropriate, I document significant judgments so the analysis remains auditable and easy to revisit. In your answer, discuss source data validation, reconciliations, reasonableness checks, version control, review of formulas and assumptions, tie-outs to the general ledger, and clear documentation of judgmental items. Question 11. Describe a time you had to explain financial information to a non-finance audience. I once explained a budget variance to a student organization leader who was uncomfortable with accounting terminology. Instead of discussing accruals first, I showed that spending was higher because event deposits were recorded earlier than expected, not because total annual costs had increased. I used a simple timeline and separated timing from the full-year forecast. The leader understood the issue and adjusted the cash plan. That experience reinforced my approach. Start with the decision, use plain language, and then provide technical detail when needed. Focus on simplifying technical concepts, leading with the business implication, using a concise visual or example, checking understanding, and adapting the explanation without sacrificing accuracy or important caveats. Question 12. How would you approach building a monthly management reporting package? I would begin by understanding which decisions the package must support and who will use it. Then I would establish a controlled data pool, reconcile key totals, and organize the package around actual results, budget variance, forecast changes, and operational drivers. I would highlight material items rather than burying leaders in detail, using concise charts and commentary. Before distribution, I would complete review checks and confirm that definitions remain consistent. A strong package should explain what happened, why it happened, and what management should consider next. Mention understanding the audience and decisions, gathering standardized data, reconciling results, presenting actual versus plan trends, highlighting drivers, adding forward-looking commentary, and establishing a consistent review calendar. Question 13. What is working capital, and how would you analyze it? Working capital generally reflects current operating assets minus current operating liabilities, with cash conversion driven by receivables, payables, and inventory where relevant. I would analyze days sales outstanding, payment timing, aging, seasonal patterns, and changes in accrued liabilities. For an insurer, traditional inventory may be less important, so liquidity, premium collections, claims payments, and investment maturities deserve greater attention. I would distinguish accounting balances from actual cash timing and assess whether a movement is structural, seasonal, or caused by a one-time event. Be sure to define working capital, discuss receivables, payables, inventory where applicable, operating cash conversion, trend analysis, seasonality, liquidity implications, and why insurance businesses may require a different emphasis. Question 14. How would you evaluate an investment or expense request from a business partner? I would first clarify the strategic objective and define the incremental cash flows, including implementation, ongoing, and opportunity costs. Then I would estimate benefits such as revenue growth, expense savings, productivity, or risk reduction, and test the assumptions through sensitivity and downside cases. I would compare payback, return metrics, and alternatives while considering execution and compliance risks. If approved, I would establish measurable milestones and review actual outcomes later. That closes the loop between financial analysis and accountability. In your answer, cover strategic alignment, incremental revenue or savings, implementation costs, assumptions, payback or returns, risks, sensitivity analysis, alternatives, and post-investment measurement against the original business case. Question 15. What would you do if a senior stakeholder asked you to change a number to meet a target? I would first determine whether the number reflects a legitimate correction, such as an updated invoice, timing issue, or documented assumption. If not, I would explain that changing it without support would compromise reporting integrity and could create control or regulatory problems. I would show the actual result, identify legitimate levers or forecast actions, and preserve the audit trail. If pressure continued, I would escalate through my manager or established ethics and compliance channels. Accuracy and trust must outweigh short-term presentation goals. Focus on integrity, investigating legitimate corrections, preserving the audit trail, explaining the consequences, escalating through appropriate channels, and refusing unsupported changes while remaining professional and solution-oriented. Question 16. How do you prioritize competing deadlines during month-end close? I prioritize tasks based on deadline, materiality, dependencies, and the risk of delaying downstream reporting. At the start of close, I map required inputs, complete high-dependency items first, and use a checklist with clear owners and status. I communicate early when data is late or assumptions need review, rather than hiding the issue until the deadline. For repetitive work, I use templates and automation, but I retain key reconciliations and review controls. Speed matters during close, but reliable results matter more. Mention materiality, reporting dependencies, fixed close deadlines, early communication, task sequencing, standardized checklists, escalation of blockers, and protecting accuracy instead of sacrificing controls for speed. Question 17. Describe a time you found an error in financial data. What did you do? While reconciling a report, I noticed one department's expense growth was inconsistent with its activity level. I traced the issue to a duplicated source transaction created during a file merge, quantified the effect, and informed the person responsible before the report was finalized. After correcting the data, I added a duplicate identifier check and reconciled record counts before future uploads. I also documented the issue and resolution. The experience showed me that unusual trends are valuable control signals, not merely presentation problems. Be sure to cover how you detected the issue, quantified its impact, traced the root cause, communicated appropriately, corrected the data, and introduced a preventive control or process improvement. Question 18. How would you assess the quality of a financial forecast? I would evaluate both accuracy and usefulness. I would compare prior forecasts with actual results, identify recurring bias, and decompose errors by revenue, volume, rate, timing, and cost assumptions. I would test whether the model reflects current operational information and includes sensitivity or scenario analysis for uncertain drivers. I would also ask whether forecast updates arrive early enough to influence decisions. A forecast is not successful merely because it looks precise. It should make uncertainty visible and improve resource allocation. Discuss forecast accuracy against prior estimates, driver-based assumptions, bias, sensitivity, scenario coverage, operational alignment, cadence, and whether variances improve decision-making rather than simply measuring statistical precision. Question 19. What role do controls and compliance play in finance at an insurance company? Controls help ensure that financial information is complete, accurate, authorized, and produced consistently. In insurance, they also support policyholder protection and regulatory confidence because obligations extend far into the future. Examples include segregation of duties, approval thresholds, reconciliations, access restrictions, standardized documentation, and review of unusual transactions. As an analyst, I would follow the process, retain evidence, question exceptions, and escalate weaknesses promptly. Effective controls should be practical and embedded in the workflow, not treated as paperwork completed after the analysis. In your answer, explain reliable reporting, policyholder protection, segregation of duties, approvals, reconciliations, access controls, documentation, regulatory expectations, and the analyst's responsibility to identify and escalate exceptions. Question 20. Why should we hire you for this finance analyst position? You should hire me because I combine strong analytical fundamentals with a careful, collaborative working style. I'm comfortable using Excel to organize data, investigate variances, and build clear reporting, but I also focus on the business question behind the numbers. My experience has developed attention to detail, communication, and ownership when results are unclear or deadlines are tight. I'm especially motivated by Northwestern Mutual's long-term perspective, where accurate finance work supports financial security, responsible decisions, and durable client trust. Make sure to connect technical skills, analytical judgment, communication, attention to detail, integrity, learning agility, and interest in Northwestern Mutual's mission, while supporting claims with concise evidence from experience. If you are still with us, congratulations! You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.